One of the largest hedge funds in the world has decided I am no longer in this housing market.
Ooh, I'm staying out of this one.
Now, what would make one of the biggest hedge funds to say,
we are no longer buying houses in this market?
You heard me right, guys. The evil corporation,
Excellent.
BlackRock, has decided they are no longer going to buy single family homes. And they've decided not to do this in 38 cities, guys. What would make BlackRock decide to do this? Welcome to the channel. My name is Orlando. I have been in real estate financing for 20 years and have been a real estate investor for 15.
Hey, this guy knows about it.
Let's jump into this craziness. The housing correction intensifies Blackstone to stop buying homes in these 38 regional housing markets. The pandemic housing boom brought a flood of investors into the U.S. housing market. Mom and pop landlords rushed in. Airbnb hosts added to their portfolio. Amateur home flippers returned with a vengeance. Record home price appreciation also brought out the big dogs, Wall Street. Now, we know this has been going on. I did videos where I talked about what's going on with Airbnb, how that party has stopped. Then I went and I did a video where I showed you guys that flippers were dying off too, and they're saying, I'm getting out of the market. Now I'm doing a video on Wall Street saying, I'm out too. I think we're starting to see a trend here. It's starting to look like everybody's getting out of the housing market. Oh, man. But the real question is why is it that everyone is jumping out of the housing market?
Why?
It's because there is no longer money to be made in overpriced homes. We're starting to see the prices of homes drop. And what does this mean for you? This means that if you keep an eye, remember guys, keep an eye on your housing market, you should be able to get some good deals that will be had coming in fourth quarter, beginning of next year, who knows? But this is the reason why I say keep an eye on your local market. These deals will be coming down the pike, if not already here in your market. And then it says, but the party is now over, or at least on pause. Look no further than Blackstone-owned Home Partners of America, the firm which is one of the nation's largest private landlords, announced on Thursday that it will halt single-family home purchases in 38 U.S. regional housing markets by the end of September. And this is what they said, guys. This is the reason why they're stopping. It says, we assess several factors such as home prices, appreciation, state, local regulations, and market demand to guide our investment plans to best serve customers. We hope to resume purchasing homes in these markets in the future. This is what Home Partners of America said. Now, let me just go ahead and let's summarize this. Well, guys, the reason why we're not buying homes in these markets is the housing market is going down and we're not making enough money. We believe we're in a housing recession right now, and we don't want to buy houses that are going to go down in value. That's how the press conference would go if it was an honest representation of what they really meant. But you know, this is business and they're going to say it in a way that makes it look like they will be coming back to the market and they're only doing this because of XYZ. That looks like they're trying to help the consumers. Huh? And I get it. But look at this.
Where?
When we're seeing Wall Street jump out of a market, this should be a red flag. This should be a red flag. Evil, greedy BlackRock.
Hold on, it was you.
Everybody dislikes BlackRock, especially when they're buying multiple tranches of single-family homes and then kicking up the rent. Hey, look, I get it. It's capitalism, but let's just stick with this story here. They're going out buying all of these homes, raising the prices. Now, are they bringing up the area? I would hope so. Do I know that for sure? I don't know. But let's just say they are bringing up the area. Are they helping bring more businesses to the area? Are they providing more jobs? Maybe, maybe not. But we do know is a lot of people are being priced out of this market. And let me tell you this, guys, you know, I own properties, I own apartment complexes, and I can tell you this right now, the season is slowing down. Now, I don't know if it's because of the season or the economic environment, but this is what I do know. Applications for rents that are high are slowing down because people cannot afford this.
I'm broke.
Now, obviously, we do know that we've seen multiple media outlets saying that we're in a housing recession. They don't want to say that we're in an economic recession, but they will say that we're in a housing recession. And now, only thing that needs to be had to say that we're in a recession based on the government is job. If job losses come, then they will agree that we're in a recession. But let's be real, 2 quarters of GDP loss, we're in a recession. We're in the recession, guys. Don't let them fool you on that. The pullback by Home Partners of America was purchased by Blackstone for $6 billion. That's a lot of money. And 2021 comes as average Joes and investors alike put their home buying plans on hold. The result isn't pretty. On the year-over-year basis, existing home sales and new home sales are down 20.2% and 29.6% respectively. Almost 30%, guys. We're down 30%. That is insane. Remember where we were 6 months ago. Everybody was saying, oh, this is the best time ever. Let's party, right? You know, if you keep doing this, I remember people in my comment section saying, Orlando, this is gonna be 20-30% year over year for the next 4 years. And I was just like, what? Really? You think this is gonna stay on and happen year over year? That's insane. And now, 6 months later, oh, now it's looking like I was right.
This guy knows.
Me telling everyone, look, these numbers and the way things are looking, it doesn't look like we're going to be heading in a direction of year-over-year growth. It looks like the market is slowing down. And now we're here where big hedge funds are no longer wanting to be in this market. The announcement by Blackstone-owned Home Partners of America also comes just as more Wall Street firms are realizing that the intensifying housing correction would translate into falling home prices. What? That's crazy. A housing correction or a housing recession would mean that housing prices would go down? Have you guys ever heard of this guy named Orlando Bider that told you when a recession comes that normally home prices go down? Do you guys remember listening to a guy like that telling you that? I don't know. But these guys literally are saying when a housing recession hits, prices will go down. Well, duh. What do you expect to happen during a recession? A report was done by Moody Analytics downgraded its outlook on the U.S. housing market, projecting that 5 to 10% price cuts could manifest. Well, we're seeing that now, guys. We really are. If you go onto Zillow, Redfin, or wherever you go to look at homes, there are price cuts. And these sellers who decide to continue to keep their prices high, we see these homes on the market longer and longer. Let's get into the juice of this squeeze, right? You guys want to know what markets here are they deciding to pull out of? Well, it says here, those at-risk markets that are also among the places where Home Partners of America's plans to halt purchases. Some other pause markets, including Deltona, Florida, Columbus, are also at risk. Some others aren't. So let's take a look at this chart. So we see here some of these areas. We see some in Florida. We see a lot of like this Midwest area, that a lot of red arrows here. And then we see some areas here like Tucson. We're starting to see some areas like Boise. Boise is going to get destroyed, guys. I literally mean this. Like, Boise went up so fast. There has to be a pullback. And these guys went up 60%. You know there's gonna be some shavings. When you go look on Zillow and you're in Boise, Idaho, you should be seeing deals right now. You should be seeing cut prices. Now, listen, I do want to, let's put this disclaimer out. A lot of the cut prices are still overpriced, right? We're seeing 20, 30% cuts, but the property went up $150,000 over. So you still want to see those prices come down, but nevertheless, the prices are going down. And that's what we want to see. Now we're seeing a lot on these coasts. We're seeing Myrtle Beach. We're seeing Asheville. Like I said, you may not be in all of these areas, but a lot of these areas, they're stopping. This should be a red flag if Wall Street is deciding to get out of properties. This is a red flag for investors, buyers, and sellers to know how to evaluate what you're trying to do in these markets. If you're trying to buy, then that means that you need to be looking at these areas every day to see what price cuts are happening. As a seller, you may decide to go ahead and say,
if I go ahead and sell now, I'll get a higher price now than I will in the future.
So you may want to go ahead and put your house on the market right now, especially if you're going to have to sell regardless in the next 6 months or a year. I believe you will lose value. And then as an investor, you may want to go ahead and decide,
okay, I'm going to hold off buying right now, and I'm going to go ahead and see what's going to happen in this recession because I will get better deals down the line.
Back in 2019, Blackstone backed away from single-family home business after selling its remaining shares of Invitation Homes. Then in 2021, it made a big splash with its purchase of Home Partners of America. At the time, Home Partners America owned 17,000 single-family homes. And this is really important, guys, to understand what's going on. This is an opportunity. This truly is an opportunity where if we know interest rates are going to go up, we know the Fed is going to continue to do things like that. But if you're currently in the market to purchase a home right now, get into an investment property or sell your home, this type of information is critical because we all know that these huge hedge funds in Wall Street, the amount of data and information that me and you may not have, they're looking in the back office. They're speaking to individuals way before we even see this information that I'm giving you right now.
Excellent.
They are making this decision based on that info, stuff that we probably, and data that we probably can't see. So what can we say about that? If Blackstone is saying, I do not want to purchase homes because we know they want to make money, that means that the opportunity for you to purchase a home, even with interest rates going up, there is a higher probability that that will be coming down the pike. When will the big crater drop happen? No one could tell you that. I couldn't give you a date if I wanted to, but what I can say is always keep an eye on your current market, guys. It is so important. Look in the next quarter, beginning of next year, a lot of things gonna happen. Make sure you keep an eye on the holiday season that's coming up. Winter is coming, and I don't mean Game of Thrones. But anyway, guys, I hope you got value out of this content, guys. I need you to watch this next video here. It will help you understand what's going on in this ridiculous, crazy housing market and also get into your first rental property. Check out the description below. I have some useful links there, membership program, and also get your free credit report. I will see you on the next one. Thanks.